on Monday. Don't forget to study my trades here, right, in the daily analysis, putting them together with this secret training video. So it's important. Now, you notice in the morning I was just trying to scope lots of puts here. Let me explain that. So you see, talked about some micro dual algorithms that's forming, right? So firstly, we saw right at the start, we had very strong buying continuation, and that started turning into orange. So that by itself, it's already a form of dual algorithms, isn't it? And then you saw magenta that started forming. Now, this is not a form of dual algorithms, yes. You see the weakening of the buying, and so that means that the bulls have to allow some selling in order to build some liquidity. So that is the basis of my early scope trades here. Now, we were lucky there was this pink algorithm that showed up, so that helped make some very good decisions here. I would have shorted it. I would have added more contracts to my scope here, but I was already making some profits and we were going nowhere. So I would have added here, but you generally realize that most of my contracts, when I add them, right, so you can see my entries here, right, most of them, when I add them from already winning runners, and that's at a cheaper price from when I closed them. You notice that, right? So that's the second principle. After understanding the structure, you therefore take a cheaper contract from where you opened them. So you're always ahead. So you see me open here, I think, one here, I think, and one here, I think. So you see I'm always ahead, and structurally, how does that work? This is a zombie, right? I knew that the bulls, in that case, if the bears wanted to head down, I would see a clean continuation. Otherwise, the bulls are building liquidity, the pink, and so this is known as the zone of mutual interest, and we managed to catch that. It doesn't matter, right? It's going down, whether for bulls or bears. You just want to find profits in the charts. So it helps that there's pink, because you see, protecting your trade, taking profits becomes easy when you have penny perfect algorithms right there. So when the move down didn't fully materialize, technically speaking, I would have caught along here if I were less distracted. Right, I thought about that, but it doesn't matter. You can always wait for retracement here. You see the perfect retracement that formed. I caught the trade anyway, right? So it was a $3 trade. I closed at 9:30, I think, a little bit further down my entry, right? So about 250 trade. It's good enough. Now for early candles, my rule of thumb is to just take $2 profits per contract. That's good enough for me, because if I'm taking 50. If I wanted to, right, 50 contracts at $2 each, that's already $10,000 right there. So you understand the basis behind what you're planning for in the early candles. And beautiful here, you see how it started forming. Look at the retracement here with the red candles. So instead of chasing this green, wait for the retracement. You can have even tighter stops here, right? If it wants to head down, your backup was this blue, which we identified a little later. I think I got it around here, not here. But otherwise, yeah, you see plenty of support levels you can base your calls on instead of just chasing the breakout on the green. Because this green buying just wasn't sustainable today, especially at the early candles. You don't see that green buying up so quickly. Right, so understanding this and the early candles was pretty crucial here. Now thereafter, became straightforward, right? We were just expecting, right? Just take a look. It's the dual algorithm setup again. I talked about this all the time. More importantly, if you were charting diligently, you see the tapering here at the top, right? So when you see tapering here, you know that there could be some form of early starter position on the break here. I took my trade. This one, I think I took it here, right on the break of the orange. and the magenta, because you saw the magenta already starting to taper from the top. So likewise, it's a small position. I think I took 80 cents here, right? It's even smaller than my stop loss. You understand the logic why I talked about the strike price already. And knowing that if this wants to head down, right, it's going to retest this. So I will generally have a very good way of taking back my profits. I think by here it was already 120. If you wanted to, you could take more profits here. 120, 130, I think. I don't truly, I'm not checking it up, but it's about there. I think I can tell from the move here. It's about 50%. You could protect the trade. Let's say if you take, well, 10 contracts, right? If you closed, maybe 7 of them you're covered for the trade. The rest of the runners, you can even leave it down. A small money, yes, but understand if you take 100, it's going to be very big money for you. And knowing that this is a zombie, especially with the teal, it's so much easier to guide your runners down, isn't it? So this teal came and it helped to guide my runners all the way down. So first 100% trade here, understanding the starter position, and thereafter just take a look. Look, it's the dual algorithm setup, right? We managed to close the cup, and you see that dual algorithms. This dual algorithms only work because our magenta was penny perfect here, right? You see the dual algorithm setup, so this was a clear short opportunity here, right? We managed to catch this, and this was beautiful as well because in that clear teal algorithm right there, and you had very tight stops with that pink algorithm there. Now you see the pink liquidity here, right? We're out of time to catch it, so if we do catch it, this may be tomorrow. I will talk about that, obviously not in the secret training video, but the daily brief videos here. So we'll talk about that then. But you notice I talked about how waiting to grab this liquidity instead of just trying to catch the break of the pink. You see, there's no need to catch the break of the pink. And this was why I mentioned if you wanted to go long, you have to wait. Notice, you have to wait for an additional pink algorithm to start grabbing this liquidity here. So that didn't happen because we were, well, in that magenta. And, well, there's another trade here that I took, which was a larger trade than this move, right? Because I took a strike that was a little far off. But just take a look if we close the cup, right? You're never truly missing a trade. There's always a trade ahead because I took my 350% trade here just from this 1 point move. And you understand that because once again, take a look. If I were to extrapolate this magenta, it's still the dual organs at play. And even better with the pink right there as my resistance. So I have a very good tight range to manage my stops here. And once again, teal on the breakout, that accelerated into the green on the break of that magenta right there. So obviously we got lucky with that move. But are we really lucky? We prepared for it and got involved. You protected your trades and anticipating for that move here. Now, the choice of my strikes was very important here. If I'm not mistaken, let's take a look. If I'm not mistaken, I took, well, for SPX is 6490, right? 6490. If I'm not wrong, 6490 is here on SPY. This level here, where 648 is, right? So I took half a point out, right? That's the minimum strike range that's out of the money, right? One strike of the money is 6490, right? So that's the most value for money, especially near end of day, is one strike of the money. It's value for money because you are realistically within range to get in the money, to get paid, and you don't have to worry too much about this deteriorating excessively because you are within range. You have to understand you have to choose a strike that's realistically within range. So it helps you when it moves. So even if it moves here in this very small move, without this large candles here, you still get paid here. You understand that? If I were to choose, for example, a strike that's where the 5-day moving average is, right, which is probably 3 points down, having this early move does nothing for you, especially at 3 p.m. So when you understand that, you know how to choose your strikes. So the choice of strikes, very important right here. Once I got this trade in, there are several points I want to bring out here. Now, the first thing is I saw this liquidity here, right? So I was expecting at least a retest to this liquidity if we break out of here. And so this is why you don't see me protecting the trade. Partially also because the contract value never went down, right? So thankfully, this was selling in the teal and subsequently accelerating in the green, because I was banking on that duo algorithms to minimally retest this liquidity here. So by retesting this liquidity, this is my strike, right? So this is 64.90 on SPX, and this is half a point away, right? So at that point here, when I closed some trades here, when I protected some trades here, if I'm not wrong, it got to $3 here, just at the break before the green accelerated here. So half a point is $5 on SPX, or 50 cents, right, on SPY. Half a point is 50 cents on SPY, which is $5 on SPX. So my target price here was $8. It got to $8, but I closed it early because I was afraid I couldn't get filled. So that's fine. It's one of the problems of trading larger contracts. I got 20 contracts here. So you understand that. When you understand that, right, you know where your target is in that case, right? And you have to understand, where will I cut my trades? I would cut my trades if it didn't follow that teal or we broke out of that pink here. Now 185 is a little tricky because I'm a little out of the money. And if I don't see that it's able to enter into 648 here on SPY before it goes down, but I will probably cut it at $1. I'll take a 85 cents loss, which is fine because that's still within your stop loss target. So once again, closing end of day, try to avoid going too deep in the money because it's very hard for you to manage your risks then, especially for SPX. And likewise, don't go too out of the money if the structure is not realistic or supports this move. So understanding one strike, the strike price is very important if you want to catch this 1 point move with about 300% profits just from this 1 point move. I remember in my video I talked about how this is technically not just 300%, right? Because with the pink penny perfect algorithms and the teal, right, this turned out to be, I remember I talked about this turned out to be more than, but I'm being generous here with my stops, right? I'm truly being generous here with my stops, because if I'm being very tight here with my stops, right, this is 20x, right, 2,000% based on your stop price, not on your contract value, especially in the late of the day. Now, late of the day, you have to be using your profits from the day instead of going full in. So this was quite an easy trade to take because with profits in the day, you are sure to be green for the day. You can undertake this risk. For me, $1.85, that was an easy risk for me to take because this contract value will not go to zero immediately until we stay above. You understand the strike is here, right? This was 185 at 3 p.m. So unless we stay extended period right here, which means the structure has failed, this is not going to zero. Not yet. It's going to maybe go slightly above $1, and I'll have plenty of time to stop the trade here. So it's quite stress-free for me, quite an easy trade to take. So understanding the thought process more than just the structure, right? This is basic now. Right? Identifying structure is basic now for you. You need to be looking out for risks to manage, right? Clever choice of strikes to maximize your returns. And so at the end, you notice as you get better on top of structure, it's about minimizing your risk and maximizing your rewards, right? And with 0 day to expiry options, you notice how powerful that can be. It's powerful. You have to learn how to use it. So the more chop, the better, right? And be realistic. Sometimes you just need a 1 point, half point trade. Remember what I always tell you. If you wanted to take this as well, maybe from the orange, the break of orange, right? Once you saw magenta, you can too, right? If you caught this part of the move, it's at least 100% too, and just half a point move. So plan your trades accordingly, practice, get good fills, and more importantly, you have to be more familiar with your brokerage platform, because you have to be understanding that you are the weakest link, right? Your fingers are the weakest link. The way you place your orders, you have to just practice enough to get into trades quick and not get greedy, because, right, I targeted $8 here, but I closed it at $6. That's fine. You don't have to be maximizing your trades, because one candle going against you can wipe everything out. So when it comes to 0 day to expiry, you have to grab your profits quick, because otherwise someone else will do it. Someone else will take your profits within split seconds. And the truth is, we can never be fast enough, and we don't know what we don't know, because we don't know what's going to happen within the next second. Someone may take off your profits and the liquidity may exit, and this may bounce right up after you are quite deep in the money. So my rule of thumb was to, every time you see a large candle, 1 minute is more than enough time for some reaction. Right? So whenever I see a large candle, I take some profits, right? And I leave my stress-free runners to test out whether the precision algorithm is the one that's leading the breakout here. Tuesday, a little straightforward here, right? Understanding the selling in that teal with that large candle here, right? Probably identify the pink at that point. Now, this it's a possible trade. Take it from the magenta. Take it from the break of teal here. See the buying continuation. And so the subtype trade it's fairly all right. You understand it. But as I always mention, you wait for cups to close, right? Especially when it's the early candles. And when you see that the cups are closed, beautiful zombie trade you can take here, isn't it? So once I am able to see the break of the green algorithm, and another confirmation will be the break of that orange, this is a beautiful zombie trade here. And notice again, dual algorithms. It's always the dual algorithms if it wants to sell early, right? You notice the dual algorithms here, right? Beautiful trade here, right? We identified the blue algorithm as well at that point. Now, it's not consequential. I'll be honest here. You can do without the blue at the start here. The magenta will be more than enough. Understanding the dual algorithm setup, understanding the zombie trade, especially from the lack of buying strength, especially on that breakout. And so you know that this is not a handle that's forming, because the selling is so much stronger than the buying. Learning to identify that here is very important. So once again, you see that it's forming that green and then weakening, right? And you see the strong selling that's forming, and you see that it's being controlled by a stronger bearish control from the dual algorithms here. And when you can combine that together, you know that this is heading down here, especially on a break of the magenta. Still, you have to be using the precision algorithms to guide you. Right, so this was a straightforward trade for me in the morning. Remember to review right through the day. Yeah, understanding this. Now, if you wanted to wait 4 or 5 days, you can, because I'll show you later. Right, so this was a easy trade here, especially also with the news. But you notice, right, the downside will only happen when we retest major levels. In this case, the 5-day moving average. Now, beautiful liquidity here, yes. But we did not form any head and shoulder pattern, right? We didn't grab the liquidity again from the 5-day moving average. So this is not heading down. Yeah, you can probably take some zombie trades here, right? Maybe you can take a zombie call here, right? It's a beautiful trade if you want taking a zombie, especially from the 5-day moving average. Very clear stops, good structure. And once again, it's the same concept here that I used for this zombie here. You noticed, right? Understanding the zombie that could have happened here. I used it. You could use it here as well near the calls, right? You saw that the selling is not as strong as anticipated. The bears need to build liquidity. And so you take the zombie call here, and it's absolutely legitimate trade here, especially with 5-day in the vicinity now. You see it here like that, but on the day itself, it was like that, right? And you see the blue algorithm that you can use to guide your calls as well, right? Because it's, remember I mentioned, it's a trending up line, and if it's trending up, you have calls. Isn't that great, right? They're managing your stops even better because it's trending up together with the stops. So yeah, a call will be beautiful here, but you have to learn to see how to manage it, right? You have to protect it by the blue. Penny, perfect. Now, as it's heading down, this is the main liquidity, and you see the possibilities that it doesn't head down because the blue picked it up quite early on, right there, instead of the bottom range here. Right, so this blue algorithm started buying, and I want to show you that. There is an inverse head and shoulder pattern, but this inverse head and shoulder is something that I will never take. I will never go long here. But there is a very simple trick here you can go long, right? So I would go long for that zombie here. This was a no-brainer zombie if I were in the trade. But I would never go long here with the inverse head and shoulder pattern, even though it, grab the liquidity quite beautifully there. But there is a trick here I want to show you, right? You see the buying is in blue, right? So if you were to chart it more diligently here, now you notice something. Once we broke out of that pink, and to be honest, I think there was another algorithm here that if I were around, I would have identified it. Let me take a look. I think it would be, I don't have the live orders here with me now. But my guess is that there will be a stronger bullish algorithm here that you see it's basing off. And this will be my indication that the bulls are building liquidity here, right? But besides that, if you don't have that knowledge at that point in time, right, I want you to see once we broke out of that pink liquidity here, right, it's grabbing the liquidity here, isn't it? Now, where I may go long will be here once we bounced off the blue algorithm here. So bouncing off blue algorithm, you see the orange is in play. Orange is trying to break out of the blue. And I may take probably one trade here, half a point trade, and realize that it is not buying in the stronger buying algorithm, starting to grind up. So to be honest, you can take the zombie here. I think it's a great trade up, right? With the 5-day clearly here. Clear targets here with the blue resistance and the pink. So this was a good trade for you to go long. But thereafter, it just got really difficult because the buying is not great. It's just slow grind ups. So don't be fooled by the market. It looks like a great reversal, but it's just a very slow grind up right here. Probably one trade here near to 130. Probably not 100% trade here if you don't choose the right strikes for your calls. But I can manage maybe a 50 to 80% trade. It's absolutely possible here. I stopped trading after this. I'm not feeling well that day. And you see it started grinding up only after hours. This is because of earnings, right? Oracle earnings right there. So you cannot, on hindsight, it looks great, right? This way up. But as a day trader, you know better. And so, see, move up like that, it's great for your portfolio. So you have to learn to manage a portfolio because not everything is day tradable. Some of you just probably want to swing a trade. I wouldn't advise that, right? Build up your portfolio instead. It's so much easier than swing trading this. The trade to take from the long will be that zombie of that 5-day moving average that I mentioned earlier. Now, if you have protected runners and you allow it to run all the way up, especially if you are trading futures, yeah, this will be great, right, for runners, because as long as it doesn't break the blue algorithm, you're absolutely fine. So yes, runners only. Some trades are runners only. You do not try to force trades here. So no, don't force trades here. Understand how to be choosing your battles. And as I mentioned, the trade that I would probably take here, right, I've already shown you here. Only maybe the break of that blue, and only if I see pink building liquidity, which it has. So pink and break of blue. I'll probably only take half a point here. And that's good enough, isn't it? Just get involved. But otherwise, catching this sustained move only if you have a zombie protected with runners and with a good strike price, mind you, because if you chose a strike that is at this 649 ping here, if you took a call here, it will be worthless here anyway, because you're just literally at the money. It doesn't mean anything, right? So you're still losing money if you chose the wrong strikes. So I would choose a strike price that's probably here if I was taking a call, right around 649. So at least this will be worth $1 because of the intrinsic value, because there's $1 above your strike. For SPX, it'll be $10, right? So this would still be good value, but I don't know how much was it here. You have to understand, right, the choice of strikes, especially if you want to hold a trade throughout the entire day, and no chance I'm doing that with SPX. So you have to learn to be waiting for structure here, and then I'll just let my portfolio grind up instead of catching a day trade here, right? So choose your battles. Wednesday, quite straightforward day today. Now, understanding this magenta is quite important, and part of that trade here is also understanding that there is no structure for a buying continuation. Granted, we were buying up in that orange, and you see that. We probably have one or two big candles here on green, especially this breakout here. But if you cannot identify a clearer inverse head and shoulder pattern, and a big part of it is understanding that 30-minute chart here, isn't it? Right. So if you wanted to short here, this would have been a great opportunity here, and I will show you where this is on the 1-minute chart, and that's where the magenta is right here. So understanding this is quite important. There isn't any structure to go long. You don't see me suggest to go long here until you see that the teal starts to form a clearer liquidity like that, right? So this was as good as it gets here while waiting for the pink. At the time, we already identified the pink algorithm. So until it grabs the liquidity here, this is not going up. So yes, this is a very good example of a long structure, and you cannot front run it because you are, well, technically in that trending down controlled algorithm here. So if you were to take long, you are actually fighting against the market to build liquidity. It just doesn't make sense for you. So you have to be looking out in that case. This will be a great zombie trade. You saw that the market needs to build liquidity after a push up here with that orange. And this is where you know you're preparing for perhaps that head and shoulder pattern. Now remember, dual algorithms, isn't it? Do you see that? If you were charting this more diligently, you will see the dual algorithm starting to form. Right? We started from orange and it started to buy in that magenta instead. And you know that is buying exactly from the bears, building liquidity to grab this way down here. Now this became quite beautiful because of the blue and the green precision algorithm here. So this was quite an easy trade to manage. The only difficulty I would think that comes from here is identifying whether this is the inverse head and shoulder or the head and shoulder pattern here. But the difference maker is understanding this magenta, isn't it? So once you see that, all you had to do wait for some retracement and just take a look, even in the breakout here. say you identify the magenta is in control, right? You took a trade here, your risks managed here. You see green coming to play, so you know that the green is a precision algorithm that's in play here at this range. Wait out for that, right? Can't get a good entry. Do you see the retracement here? Now this retracement will be a perfect entry. Let's zoom it in. Right, it's almost to the penny, isn't it? You see how beautiful that retracement is to the magenta. You know green already, in fact, right? You know that magenta is in control of the range here. You already saw the dual algorithms, and this is as good as some form of a nested right shoulder here, especially on the retest here on the magenta. And all you got to do, wait for the market to grab more liquidity. Now, if it sells down in the green, that would be the best case scenario. So you have to learn to protect your trade. Protect your trade, by then you are completely stress-free. You can manage your stops according to the magenta. And in that case, I identified the blue algorithm right at the meantime here. Let me just take a look. When did I identify the blue algorithm here? I think a little bit before that. Let's see. Give me a minute. I think right here. Right around 11, already identified the blue algorithm. Yeah, about that. Right, so we already identified the blue algorithm. Then you can see how it is beautifully adhered to right there as a precision algorithm on your trade down. Already protected here, you're pretty stress-free. Magenta is acting as resistance, as I mentioned. It's a better entry here. And this is a beautiful first trade here. Now, you do see the bounce here, but you just have to be absolutely careful, isn't it? I mentioned about the pink algorithm, and I charted this right before it happened, right, to try to warn you about this. And although we are selling, I mean, we are buying up in that orange algorithm here, you just have to be very careful of that pink. The main liquidity is here and here. We didn't even manage to grab it. So just be more mindful of that. You see magenta is in control again. Do you see that again? Do you see magenta in control again right there? Another beautiful trade. This time even better because we already identified the yellow. So there is even more confirmation on the break here. Once again, blue is selling. Now we've already seen blue selling. So blue is in a way de facto precision algorithm you can base on. Anything that's green is a great bonus. That's where you take more money out of the market, right? And likewise, again, you see it's the same old structure that's forming, right? There are dip buyers right there. This is an indication that there are people buying the dip here because of a strong buying algorithm. But there is systematic selling as well. You see from that yellow, right? This was my next trade here. Now, the next trade was quite straightforward because it's the same old, right? You get a good fill here. I got a good fill here. And, well, it started breaking down from the orange, so that was quite easy trade to manage here. But more importantly, it will be this yellow that I based my stops at, because this yellow was quite an important level together with the pink here. I remember choice of strikes, isn't it? Let's take a look at that trade. That should be this trade here. This one, I think, yeah. So the choice of strikes at 65.40. Now 65.40 is thereabouts. Just right about here. I think this is probably about 65.40. Right, so I'm about half a point away, half a point to 1 point away at 1 p.m. And this was about $4.30. Yeah, that's a pretty good price. And I see that there is a large green candle, but there's a lack of continuation here. Now, you don't see the market building more liquidity. The candles, the buying is not sustained, even though we are at the orange. We are near the top of the orange algorithm, and this is why I mentioned you have to learn to identify the algorithms instead of the candles. And with that pink algorithm that blocked the buying here. Strong 653. That's a good place to take a zombie. It could be a zombie. Take a put. There's a rejection. So I'm banking on that. This could be like that, right? But I'm taking the way down first, protecting it. Or if you see a stronger position, because by then when it broke the orange, I managed to see another precision algorithm to base my stops from. So I can allow my runners to run instead of basing it from my original stop here, where the yellow is. And thereafter you see it retest that yellow, right, breaking it out in that stronger green. And so I just held my runner, just held my trade there, because that the selling is favoring you. You are able to tell what the market is trying to do there. So this was a beautiful trade. And one last trade here, and this one was quite important, because this one you notice we were, primarily selling throughout the entire day in that pink algorithm here, and you see it here again. So where will the downside go? Where is the major levels that will trigger orders for the downside to happen? Well, once again, you see the bear flags with that yellow algorithm here, right? So took a trade here because you saw the yellow algorithm that's building liquidity on the way down, and you see the green already activating. So this was quite straightforward. You knew that they will attempt to break out from that. So you protect by the pink algorithm and you wait for the green algorithm to show if it breaks out from that support level here. Now remember, the breaking of supports have to come from the strongest precision algorithm, or conversely, the breaking of resistance must come from the strongest buying algorithm there. So this became quite a straightforward trade for me near to end of day, right there. Right, understanding firstly the bear flag, understanding the attempt of this trade here, and once again, the gap was at 650. The gap was here, I think 650.3. Right, I took a strike here, which was about 65.15 here, near to where that pink 650 is. So you see, I took a very cheap contract here, understanding where this may go, and obviously protecting it by, if you can afford it, to protect it by the pink, but otherwise it's, cheap contracts, you can just wait for it to break out. The strike, right? You're paying a very small price for a big move because you are expecting something that could happen. Now, if you're taking it early here, now you notice, taking it early, you still can protect it and re-enter later. So absolutely all right. You can trade this. If you know what you're doing, you can always enter and exit. The point is to manage your risks and be sure that you are not undertaking too much risks while waiting for the move to happen. It's quite straightforward day to day because it's just a downtrend, but one very, very important way of learning how to find profits, even if it's, technically a slow grind, right? Because we were just grinding 2 points in the range throughout the entire pink algorithm here. But just take a look, it's just plenty of 100% trades to be looking out for, or because you understand selling continuation structure and you do not jump the gun. If you're jumping the gun for reversal, still plenty of beautiful moves, especially the zombies. So you have to learn to identify zombies, how the market may be building liquidity, and taking calls at supports and puts at resistances. If you're able to do that, get a good feel. Remember, as I always tell you, you'll be largely all right because you have padded your risks to manage it better. So it's about understanding how to manage your risk entering trades. Thursday. Now, Thursday's context, I briefly talked about that in the YouTube daily brief video, where I mentioned about this cup close, isn't it? And we were waiting for a handle. for this move here. Thursday, if I not mistaken, will be right here. Right, so the day prior, we already saw that controlled selling, and if you remember it on Wednesday, let's take a look. I think it was near the afternoon, right here. Right, I talked about this. If it happens tomorrow, it will be great. Right, we already saw the controlled selling. It was quite apparent, although there were plenty of puts that we could have taken here. So you already saw the liquidity building for that way up here. And when the cup closed, especially with the CPI, it was a perfect close, isn't it? And we're waiting for the handle to form. So this was also why I told you right at the start of the day, right here, not to short this, right? Like I mentioned, do not short this until you can see a stronger, in this case, magenta. What I'm trying to refer to is a stronger bearish control algorithm right now. So absolutely no reason to short there. You see the selling, yeah, even though we're grinding down, that's exactly what I told you, right? Even though we're grinding down, do not short this. Look out for the handle, exactly why. So when you are trading, this is why you watch the YouTube videos, because you're trying to form a context, trying to understand the different control within the different ranges here. So what I'm trying to explain is this. So in this range, although it's selling, but the bulls are in control of this range. So this selling is a controlled selling. It's meant for the bulls. You have to understand that the different ranges do signify different types of control. So in this case, this particular range, we already saw the controlled selling, right? And this has already materialized pre-market, and we have closed the cup. So you see there is a series of buying continuation structure that's forming, and we required a handle. Now, pity, it's a big pity that the handle is not much deeper, but that's fine, because there's still structure. And if you get better at this, you have to catch trades with smaller contracts, smaller sizes, if especially the structure is not that clear or large. You still can catch trades here. Now let's just take a look at this. Now I took a trade here, but I chickened out. Right, remember the trade that I chickened out here, right? That's a pity, because this would have been such a beautiful trade. And one big reason why I chickened out here was because I oversized this. And so you see, it's very important to size your trade appropriately. I truly oversized this. And so my risks were extremely immense, especially in the early candles. Now, early candles, as you would have already figured out, entails a very thin structure, right? Especially with the lack of more algorithms to control your stop loss and your risks. So if I'm not wrong, I entered it for about 43, 943. So right here, nearing to the end of that red candle. Right, I took calls at that red candle because I saw a very strong red. Now it's still in this green, mind you, but it was already nearing the teal algorithm. Oversized this because guess what spooked me out? It would be very clear what would spook me out, isn't it? If we take a look, I closed it at 44. I closed it before 44. And this candle spooked me out then. Even if it didn't spook me out, this red candle would have stopped me out as well. It would have further spooked me out. Yeah, I wasn't ready for this trade. That's because I oversized. I don't remember exactly. how many? Maybe 50 contracts here. It's big. It's big. I remember I was feeling a little edgy about this trade. But even if I entered the red candle, it was a good fill. It's not too bad. And I managed to protect it, but very minimally. And got stopped within the next candle. That's unfortunate. And one big reason was because it still continued down the green algorithm. And the teal was always trending down. So even if this materialized, but it kept trending down like this, 50 contracts here would have killed me. So there are a few things on hindsight. How could I have done this better? And firstly was, well, obviously, if I took just 10 contracts, I could have lasted this trade, right? Or take it on the breakout here. Now, once this large candle breakout, if I were in, this would be easy to protect and the entire trade will be safe. Can you just imagine that? Say you took a call right near to the end here, especially when it returned back from orange on the return back, right? So maybe here, your stops are on this teal algorithm and you protected it once the large green candle came in. You are assured, this trade is assured, because after which you went up in that green precision. Absolutely no threat. You would have easily gotten 400-500% trade right there. Well, because you protected it within the large green candle. So that's a big problem, isn't it? So instead of perhaps 50 contracts and getting $2 from the contracts, that's all I was asking. I just wanted $2 from the 50 contracts instead of that. And if I used 10 contracts, but I've got a 400% trade, I made even more money this way. So you see, you have to learn to size appropriately. What a pity this trade. This trade was a huge pity for me. Huge pity. Right, so let's say, how would I have re-entered here? If it broke out here, you see it bouncing off here. I would have re-entered here knowing that the green was already in control. You see your stops are very, very tight. Very, very tight stops right there. Understanding how to manage your stops, knowing that there is a bullish push out right there. Not too much liquidity for the bears, because this was a failed, well, in a way, failed continuation. I identified magenta, yes. Right, so there's magenta liquidity. I'll talk about that later. But much later, right? The magenta didn't appear until much later. So you know that this magenta liquidity is here. All right, how do you ascertain that? Now let me show you. Let's say I've already identified magenta here, right? So if you were able to chart this, even with the orange, say the bulls fail and the bears want to grab this liquidity again, right? This is as good as it gets. So what a chance that even this as a zombie trade will allow enough rewards for the risks that's taken before it starts heading down again, right? So can you see the possible zombie here? So understanding the strength of the liquidity will help you in also planning for your zombie trade. So yes, perhaps you're looking for a zombie trade here, or you're looking for that handle that I was talking about from that cup that came from previous day. So understanding this is quite straightforward. Yeah, we missed this, right? And that's fine, right? Because subsequently, you could tell I was quite defeated after missing that trade, right? So I took a long break throughout the rest of the day, and that happens, right? But you see, there are still plenty of trades to take, especially when understanding that magenta was in control. Right here in this range. Now, there's no need to short this. You see the short liquidity. Once this started breaking out, you would be already aware this is the short liquidity. So if it's not grabbing the liquidity like that, it's absolutely no reason to short this. If you wanted to short this, you know that it's a zombie. And when it's a zombie, you have to be very, very aggressive in protecting your trades. And just take a look. Teal was just building so much liquidity. Now, it was only until here that pink started showing some strength. And you know, once pink have started showing, then you cannot be depending on teal alone on taking this trade here. This is why teal was so unreliable. Because at the end, if you noticed, that's where we identified the pink. And you see the pink algorithm that's starting to form right there, isn't it? And on the breakout, right, that's a beautiful trade. Now, there's magenta, and it helped. Magenta helped in identifying the stop loss target as well for this trade here. So understanding the stop loss target, because you also knew how to be using magenta as your stop loss. So this was my 100% trade, nearing to the end of the day. Yeah, this one is a zombie, isn't it? Right. So please do study my red trades as well. It's pretty good understanding how to manage your risks, even for a zombie. Right. I talked about how this trade was a zombie, was meant for a zombie. Right. So you can read this. This was meant for a zombie. And that begs the question, isn't it? If I'm not wrong, it was here. So that begs the question. Instead of taking a zombie, why not wait for the inverse head to form? You see, once I get rattled here on the lost profits, you make decisions that not that great. So take a long break, you'll notice, and you'll come back for 100% trade anyway. Right? I still made 100% trade later in the day. Yeah. Where was it? Right here. Okay, understand this. Very important, right? This was 100%. I think I got it twice here. Right? So once it's protected, you understand it's so much easier to take trade. Let's see. 149. 149 was here. Red candle. It's quite straightforward, isn't it, this one, right? When you see large red. So you see, I got my act together. Instead of taking a zombie like this, right, instead of shorting this, I waited for the red candles and timed myself to get the calls, because I understood a few things about this. So my zombie became a call instead of a put, right? Because I understood that the pink was building liquidity here, right? You saw the pink that was building liquidity, and you therefore know it's also controlled by magenta here. So take a quick trade here, right? A call here. You have your magenta as your stop loss. If this breaks down, fine. Get stopped. That's fine. I will re-enter again later, right? But it's a very tight stop here, because you have both your pink and your magenta. So this is a beautiful area for you to take a call, because you have two supports here to support your trade. And I was lucky to protect my trade, because this was quite instant. I had the strongest algorithm here to guide me on the way up, and protected by magenta, right? I protected it by magenta. And that trade is almost absolutely safe already. Almost absolutely safe. Re-entered again, because you see that, look for yourself, it's pink that's in control, right? And once again, magenta guiding. And once we had that breakout here, it became easy, because you had to look for the buying continuation. So throughout the entire liquidity building here, different traders have a different objective here. So you have to understand that. Some of you looking for entries, this may not be great, but if I already have a protected trade, this will be great for me, because then I have protected runners. And what I will be looking out for will no longer be entries, or no longer be where my stops are, but instead I'll be looking out for precision algorithms to see if there's a breakout of structure. So you see, you have different objectives if you're looking for entries, comparably to when you already have protected runners. And this is why signals don't work, because as a trader, you have to understand at every minute of the chart, you have a different objective, because you take trades at different times. You take trades with different objectives. You take trades with different things you have to look out for. So I got my entry in. I protected my entry. I saw structure with the algorithms, and I got a re-entry here. And now I'm looking out for continuation, which happened with the orange. And so once we broke out of there again, I see orange already bringing it out. And this is the reason why, when my entry was at this re-entry at 209, which was about here, I stopped protecting it anymore, because it was already prior protected. So I'm getting it at a cheaper price. You realize that I closed at 480 and I bought it back in at 350. It's cheaper. So understanding that I can hold runners because I'll be looking out for buying continuation structure, then it was just absolutely beautiful. Now, even though there are red candles here, right, you don't see it breaking down below a certain level. So in this case, you can designate certain levels here, one of which will be this. You see this clear level here. So you see the bulls protecting this support level, which is a horizontal line, or certain supports can be in terms of your algorithms here. With the pink is trending down, so this green serves much better purpose than the pink line that's trending down as a stop loss for your calls. And lastly, this is the best, right? Once you have precision algorithms, it's a line that's trending up. It's a perfect stop loss target for your calls because it's trending up. You are always winning as long as it's going up. And if it fails, you can just call it off and you still can make profits. So understanding how to be looking out for your stop loss, for your precision algorithms on the breakout. So this was pretty important. So much to unpack on this day, right? You can understand it much better now. Trade most of Friday. But I caught the trade here near to the end. I will show you how, why. It's important. Yeah, right. Where was it? Yeah, from 80 cents. Yeah. So at, well, 328. Let me show you that. So firstly, you notice that we went nowhere. It's important you understand that this is just 1.5 points. So most of the day, right there, we were at 1 point chop. You can't trade this. You have to be very careful with trading this. If you wanted to take one trade, which I thought was possible, on hindsight, I wasn't trading, would be this magenta. We identified the magenta here, isn't it? Right. So identifying the magenta was quite important. And if I'm not wrong, the orange here as well, right? So if you extrapolated this here, yeah, especially once you saw this large candles forming. Now, this large candles forming here, you would have already also identified the teal. So by then you knew a possible zombie trade here. Once you saw the rejection here, you could go in and perhaps catch a possible zombie trade right there. So understanding that it's possible, if you wanted to take a trade here with the zombie from the teal and you saw the large red candles, you saw the retracement here. So yeah, maybe you would have caught I would have charted the green here, right? You would have caught this trade here, maybe, possible, while closing the cup. So you would have protected your trade 100%, yeah. Protected your trade, safe, clear precision algorithm, tapering here, liquidity here from magenta algorithm, yeah. So this would have been a beautiful morning trade and you would have called it a day. Wouldn't have went long here, wouldn't, because there just isn't any liquidity here until only when the pink algorithm appeared. So when the pink algorithm appeared, and I charted this, I think, and you see the pink algorithm building here, yeah, but I need to know when did I chart this pink algorithm. Let's see. What time did that appear? 12:53. Right, so what time was 12:53? Yep. Right, so before this pink was retested, we already charted the pink already here. So you see the pink building liquidity, yeah, fine. You would have caught another trade here. That would have worked too. Or yeah. Yeah, that's a great trade too, right? So another great trade on Friday. Call it a day before power hour. Why not? But you see, on the way up, you noticed on the way up, what happened was magenta was building liquidity. You saw that happening, right? So you saw magenta building liquidity on the way up. Now, what time was my trade again? 3:28, I think. Yep, right here. So you noticed, once magenta triggered my alerts, I saw a selling continuation structure. It was clear volume was increasing. And for those with Bookmap, you would have noticed a very strong liquidity here. Now, Bookmap is not, well, how should I put it? It's not what you think it is, right? It's not an indicator. It's not something that you can just take it at face value. So many people see orders here at face value and think, the market's going there. No, it's not just that. It's many factors you have to put it in place. It's just orders. So you have to learn to see that they are not interpreted as face value, but they are just orders that's placed. So for example, if I have plenty of orders that's placed here, the reason this gravitates down is only because there is a lack of orders and they needed to fill it, right? Someone wants to fill these orders and they just have to push its way down. I will have another video to explain it better with the actual Bookmap setup next time, but not now. But now, even with structure, you still can catch this trade, right? But with some help, right? And I had understanding of this, and it doesn't mean that when you see orders here, you take puts here hoping it gets there. It doesn't work that way. You have to understand that there is only a possibility once the selling commenced. You see a beautiful head and shoulder pattern here. The selling started commencing, and with your runners, you can hold your runners to somewhere near there instead of hoping that the trade works out. So yes, your runners can be based on understanding where the orders are. So this was also a trade that I would only take on Fridays because it's something that I can afford to lose. It's something that's it's already done for the week, right? So 38, I think it was. I think my alert was here. This magenta here, right? And I noticed, right, there was a strong selling continuation. We grabbed this liquidity and grabbed this liquidity too. Two liquidity grab at once with a strong continuation, strong volume, and a clear target. Right, the target is actually much lower. If I'm not wrong, it was 656.3. Much lower. So we didn't hit the target and many people still got trapped. So you see, it doesn't always work. You have to know that it's so much more advanced than you think it is. So just depend on structure, on algorithms, you will not go wrong. This is so much more clear. You see it's clear, right? Magenta, precision algorithm, increase volume. This is clear. So I set my alerts at magenta. It got triggered, right? I took a really cheap put. This is cheap. Why? Because if I'm not wrong, let's see the strike. The strike was at 65.85. And 65.85 was here. This is 65.85. So I'm taking something that's almost in the money. In a precision algorithm. Do you know what that means? I took this here at 80 cents. Do you know what that means? This means that as long as the precision algorithm holds and continues going down, I am going to make money because this is the strike price and I'm completely in the money. So the choice of your strikes, very important. There are people that take something here for 10 cents. You're not going to make money. You have to understand that. Now, mine went all the way to $8 and I missed it, right? Because, you see, the idea of having that Bookmap information here made me biased to think that we may go all the way down. So instead of taking profits at $8, I think it was at 7.30, 7.40, I can't remember. It was close to 8, 7.80 perhaps. Close to 8. I may have seen $8. I was hoping it continued heading down and we immediately got engulfed within the next candle. And I closed it at the end for $4.40. I lost $4. I took many contracts for this. I think 30. And that's cheap, isn't it? 80 cents, 30 contracts is not even $2,500. It's cheap. This was cheap. This was such a great trade here. And you have to understand how is it done, right? So structure, understanding that. Precision algorithms, everything you've learned, right? Structure, precision algorithms. We broke it twice, the structure 3 times, in fact, right? 3 magenta, 1 here, 2 here, 3 here. And this was clear because magenta was in control throughout. So 3 liquidity of magenta and the green, understanding the strike price. So I'm always green as long as it's in the precision algorithms. You understand the logic there. This is already in the money. So as long as it remains in that green, this will stay in the money and exponentially increase in value. Went all the way to 8. I was hoping it went here. And so I lost half the dollars. Half. From $8, it became $4. I lost half my value there. Why? Because I was hoping it went down there. So this is what I'm trying to say. Sometimes you cannot just be depending on information without proper interpretation. You still need the algorithms. And in this case, what you should have done, or what should I have done, was to protect it once it reached the support level of the green precision algorithm. At least take some profits here, isn't it? And once they bounced out, I would have closed it at 4 anyway, but I would have closed at least half of the position at 8, so my average will be 6. You understand that? I would still have made more money. So understanding this trade was very important. And look at that trade. Just look at it. It's with understanding that we may chop that day because you see the blue was in control. And remember what I mentioned. The only dump that can happen is if you know that blue is in control, and we had that near end of day. Now, will this continue to dump? I will talk about that in the YouTube video. But understanding all these more important technicalities here will help you in your planning next time, especially your strike price, your choice of your strikes. This is good value, right? This 80 cents in the money, seeing a clear precision algorithm. This is good value, and it was impossible for me to show it to you live then, because we just don't have the time for that. We have to prepare ahead. And you notice these are techniques that I do every day. So you will be adequately prepared as long as you study and review and practice. It's the same systematic, stackable techniques. So understand this, very important. Yeah, it's beautiful. Now, if you caught the calls here, this was at 30 cents if I'm not wrong. That's unrealistic, isn't it? This is a gamble. This is a gamble. Because your strikes are here, right? You don't know if it's coming down, right? You're in the money here. You don't know if you're coming down. So this is a gamble if you manage to take puts here for some reason. It's a gamble, right? But here at 80 cents. So I'm paying 50 cents more for more confirmation for a better trade. So why gamble? You see, wait for confirmation, wait for structure to form. And when you see something, you see a trade, that's when it makes sense. So always be on the alert next time, not just looking out for structure or algorithms. You are also having very clear understanding of where the strike prices are, where the liquidity is in reference to the strike, and understanding where the algorithms will lead you towards the strike price. And from there, you can plan your trades better. Now, this algorithms and strike price is something that I talked about in last week's secret training video as well. So please do spend time to review them. They may be a little long, but I promise you, they do help you consolidate and, fortify your trading knowledge a lot better. Thank you very much.